A surprise twist is unfolding in the commodity markets. While investor sentiment around electric vehicles has cooled, demand for a different set of metals is quietly gaining ground. Platinum and palladium, long viewed as relics of the combustion engine era, are back in the spotlight. Goehring and Rozencwajg say the market has got it all wrong. Their latest quarterly report makes a bold call. The bottom is in, and now may be the time to buy. Well, Adam Rozencwajg is the managing partner at Goehring Rozencwajg. He joins me now. Adam, thanks very much indeed for your time.
Yes, wonderful. Nice to talk to you today.
Well, your latest report calls this a textbook setup for a bull market in platinum group metals. What exactly has been overlooked here by the market today?
I think everything about platinum group metals has been overlooked. We spoke with a client recently, and we were explaining, a new investment in the PGM sectors, and they stopped us halfway through and they said, "Would you just kindly tell me what a PGM is?" So I think everything about PGMs have been overlooked for the better part of a decade now. And you said it before, the reason has been the view that electric vehicles will effectively decimate internal combustion engine sales. And with that, the demand for catalytic converters. But we've been quite critical of EVs for a while because of their energy efficiency. And just to prove that we're not Cassandras and pessimists about any and all new technologies, we've been very, very big advocates for hybrid vehicles, which improve efficiency without having to carry around such an onerous battery, both in terms of cost, weight, and energetic embedded energy, how much energy it requires to build the batteries. So hybrids have a bright future, and their PGM loadings are very, very high.
You described PGMs as being priced for despair. What are the current market conditions telling you about investor sentiment?
Investor sentiment, I can't even say it's bearish, it's nil. I don't think anyone has an opinion whatsoever on PGMs. There's been a few value investors that have been poking around in the space, and I commend them for that. But, all you have to do is look at what the industry's margins are on a cash margin basis, on an all-in sustaining cost basis, and it's basically zero. So the PGM price is clearly divorced from the other precious metals prices. The relationships between platinum and gold have completely broken down. Platinum used to trade at a premium to gold. Now it trades at thousands of dollars of discounts to gold. And when you just look at what the price signal is telling you, it's barely enough to make even the best PGM mines in the world have any type of a cash cost base margin at all, to say nothing of the incentive price to invest in new mines. Yeah. And of course, with PGMs, we have a massive concentration of production out of South Africa, which is, not the worst country in the world to be in, but I wouldn't want every part of such a critical supply chain being in South Africa. So we'll need to invest in new PGM mines around the world, but the incentive price barely keeps the existing ones open. Somebody came to us once and said that you could buy some of these Anglo Platinum, Impala Platinum, and we own positions in all of them. You could buy them effectively for the scrap salvage value of their smelter, and you get the asset for free. We haven't quite been able to recreate that math in our spreadsheets, but it's not far off.
Yeah. Well, let's talk supply, mine shutdowns, aging car fleets, and poor recycling rates. All of that mentioned in your report. How fragile is the current supply chain?
Oh, look, I think the market has been ignored now for so long that we're in a position not dissimilar to uranium in 2018. What we've noticed in these commodity markets is that they tend to ratchet tighter and tighter and tighter. And so you might have a amply supplied market, prices might fall, et cetera. And then all of a sudden, the underlying supply trends begin to just ratchet tighter. And for the first year, it doesn't really matter. And the second year, it doesn't really matter. And typically, you have stockpiles and supply chains and all these different things. But then eventually, you get to the point where you tip that market from surplus into deficit. And as your loyal readers and viewers know, what makes the commodity markets frankly so much fun to be a part of is that it doesn't take much of a surplus or a deficit to get these markets moving in different directions. So even a modest deficit could see platinum prices re-rate substantially higher. Look, the market is telling you that we need a higher PGM basket because you can't support the existing mine supply base. The fleet of both mines and of cars are both aging. But what's interesting on the car side, a lot of PGM supply, if it depends how you want to call it, supply or negative demand, whatever, effectively comes from recycled material. You recycle the catalytic converters at the end of lives of cars. But what we're seeing more and more is an aging fleet for a number of reasons. First of all, cars are just built much better than they were in the past. They're lasting longer. And secondly, we're actually starting to see quite a bit of backlash against all the sort of whiz-bang technology that's being placed in cars today. And certainly, when you look at the sort of sensor arrays and camera arrays, which are, awfully fun to play with when you first buy a car, until one of them, heaven forbid, breaks, and you have to take it to the dealer and realize that it's thousands of dollars to repair. So we're seeing people choose to hold on to their vehicles for longer for all of those reasons. The cars are lasting longer, and a lot of the new features are just sort of seem to have maybe overshot the mark a little bit. A lot of people are preferring their old knobs and buttons to these massive touchscreens. So I think that that's going to continue to depress recycled supply coming back on the supply side of the ledger.
Yeah. Listen, anyone looking at a stock market board over the last few years will tell you that platinum ETF investment has been in decline, ETFs. But you suggest this may be reversing. Are we seeing early signs of renewed investor appetite in that regard?
Well, what a great question. I'll be honest, it often takes us 2 or 3 weeks to write the letter. And when we started writing our last quarterly commentary, which I'd invite anyone to go on our website to take a look at, we post all of our quarterly research for free and open access on our website, historical as well as current. When we started writing the letter, no, there wasn't much sign of investor demand. And we said this could be a new tailwind to the space. We said the same thing about uranium, by the way, and that was long predated the Sprott Physical Uranium Trust. We said anytime you get these kind of smaller, more idiosyncratic markets, they could lend themselves to huge amounts of investor speculation, and that could really begin to drive prices higher. I suspect the same thing will happen with platinum. And when we wrote the essay, no, it didn't. By the time we published the essay, however, we saw that China had started to accumulate large amounts of PGMs. And there was some reason for that. Some speculated that perhaps it was the price differential between gold, others maybe to build strategic stockpiles. So we are starting to see that now. It's early days, and I think that will continue to be a tailwind to the PGM sector going forward.
Well, that's very compelling and interesting indeed. Adam Rozencwajg is the managing partner at Goehring Rozencwajg. And thanks very much indeed for your time, Adam.
Thank you.